Hello guys and welcome to another post market analysis of Bank Nifty. We are in a back Bank Nifty's chart, and this is our daily time frame of Bank Nifty. Now for the last candle that you see here is Bank Nifty's price action representing one full entire day. So this is the support which we have been in the charts. We have kept this support in our charts from the past few days, where we have seen the breakout towards the bottom and then again pull back towards this area. And right now we have seen prices yesterday open above this support area, and we were thinking about Bank Nifty going at least till this levels if it is a proper breakout. But yesterday, even though if it is it's not a breakout, it's gap up opening and then closing towards the downside. So both these candles are the same. So until you see a proper reaction of prices towards this level coming into this level, and then uh, forming a proper candlestick pattern which is bullish, excuse me, only then you can assume that the Bank Nifty is gonna go towards that area. If not, if the Bank Nifty is breaking this 43,350 levels, then we can expect that the Bank Nifty is going down. But in either case, we need to see a reaction even at even below levels, even at lower levels than where the market is today. So even Bank Nifty today has not a great range compared to these candles. These are very bearish candles, and these are decently bullish candles, and this is a hammer, and all these are dojis. So market has gone in both directions. By looking at this candle, you can say that the market has gone in both directions towards yesterday's high, and then again coming back towards till this Muhurat trading's high. So now let's go back to our 5 minutes chart and see what we can learn from our 5 minutes Bank Nifty chart today, and also see if there is any reaction that the Bank Nifty has given us based on the candlestick patterns, and see if there is any trades available today. Okay, so this is the price action of Bank Nifty. So since it is out of this area, we'll do one thing. We'll just mark this line and then delete this entire area so that our chart becomes little clear. Okay, so we are taking off that area. All right, excuse me. I'll even take the above one off. Okay, so now this becomes our important level by the time when the Bank Nifty is open. So today Bank Nifty has opened around 44,260 levels, and then immediately has formed a very big bearish candle. In fact, this is very huge that it has given us 106 points of, to be accurate, this candle's opening is at 44,264, and this candle's close is at 44,154. So we have seen a candle of up nearly 111 points of 100 and change points of candle in one single candle itself. So whenever you see a first candle like that, traditionally market tends to be in the sideways direction until this range breaks. Okay, so but let's not get into that part. Instead, let's do our video in our usual format, where we'll wait for our swing low and swing high. So market at this level, you know that it has taken a proper reaction from this level, and then when the market was in this level around 10 o'clock, you know that even this has taken a proper reaction from that place. So we can consider these two places, these two levels. This has swing high and this has swing low. And now we got an intraday support and resistance levels in our chart. Now all we have to do is just wait for the breakout or a proper reaction of the prices at this level. So after marking these two lines, so this is the place first where prices came in contact with, and then from there we really don't see any of course this is a bearish pattern, but there we cannot take any trade because of risk versus reward ratio that plays a major part in all of our entries. So your risk would have been above that, and then your reward is immediately here. Okay, here on the left side, if you see, If your reward is only that much, so your risk versus reward ratio is not at least one. excuse me excuse me again. So we can't take really go ahead and take any trade there. So now at 11, sorry, yeah, at 11 o'clock exactly, we have seen a breakout from this resistance line. But whenever you see a breakout, you always wait for the confirmation candle. In this case, we have got the confirmation candle as well. But here, if you want to take a trade towards on the call side, you have to keep your stop loss below this resistance area. So but if you look at the price chart on the left, this was the immediate reaction from where the prices have come down last time. So there if you want to enter into a long position, looks like it's not a very ideal position because of your risk versus reward. See, in this case, if you are entering there, that would have been your reward, and then below this is your risk. And again, we don't see any proper risk versus reward ratio there, so we couldn't take any trade. Instead, what you do is you wait for the next reaction. So by the time you see the next reaction, market has also given you a very good a swing high there. So it's okay to draw another resistance area there. That is what we are doing now. Okay, so we have drawn. So imagine when the market is here, you already have this as your resistance area before, but once it is broken and once prices are coming from the top, now here this is called a piercing pattern. So we have clearly explained what a piercing pattern is in our candlestick pattern series. Those who have not watched can please go to our candlestick pattern series playlist and then watch it there. So this is a clear piercing pattern. Before that, we have a downtrend, and this piercing pattern has come at an important location. And also, if we check the risk versus reward ratio, if we want to take a long position there into this candle closure, exactly below that would have been your risk, and then this would have been your profit. In this case, you have your risk versus reward ratio more than one. So this is a decent entry so far. It's okay to wait till 12:35. So this can, because this candle is a 12:35 candle, is at 12:35. So it's okay to wait till 12:35. But what we need is, we need a proper confirmation before we take any trade. So we need maximum number of odds in our favor to go ahead and take a trade. So in this case, what has happened is, so we have one, the piercing pattern, and we have two, it is coming at this support area, and we have a good risk versus reward ratio. Let me write those there. So we have the support, and then we have the piercing pattern there, and then we have also a good risk versus reward ratio that is still there. So let's check what market has done after that. So if you are entering there, keeping this as your stop loss, and then this as your first target, when is your where is your second target? See, first of all, your first target has reached only at 1:55 p.m. That is after 25 minutes. uh, Sorry, that is almost after after 1.5 hour, 1 hour 25 minutes, your first target is reached. But whenever we see our prices reaching at our first target, we we trail our stop loss from the initial stop loss to cost. So and then raise your next target. So where do you see your next target? So all these are reactions, but this is your ultimate target in that direction. Yes, that is your last target is also reached at 2:15. See, by now it has been 1 hour 45 minutes in the trade, but it has hit two targets. So what is the next target after this? This becomes your final target, the outermost line. So let's see whether, yes, even market has achieved that particular target. So after this, we would have taken an exit there at 240. Okay, so now here we have a trade which you worked for 108 points. So we'll write that 108 here. So we have seen 108 points of movement there, and now I'm taking this for our visual comfort, and then I would extend that. So here what has happened is, see, this again, Immediately after exiting at 240, you have immediately seen another rejection from there, which in turn is forming you a bullish bearish engulfing pattern, which is a bearish sign. And before that also, here we have an bearish engulfing pattern here as well. So because this is also touching this level, some might have taken exit here, but those who have kept their stop loss trailing would have taken their profits there. But in either case, we have couple of bearish engulfing patterns here coming at an important location. Of course, looking at it, it tells us that it has a good risk versus reward ratio, because that is your risk, and below somewhere here is your target, or here is your target, first target. Let's check that and let's see if our risk versus reward ratio is permitting us, we could have taken a trade there. So our stop loss is just above that, and your target is there on this direction. So here we don't have a proper risk versus reward ratio, because a risk versus reward ratio is only 0.7. Usually we need risk versus reward ratio of at least 1 to get into a trade. But earlier we have made some points, so those who have made a profit and are willing to risk that profit would have taken this trade, considering that your targets are well beyond this. If this is your target, then you would have taken this trade also, and then you would have trailed it all the way till down to 92 points from your entry. But we are not bothering taking this trade, because our risk versus reward ratio didn't factor much. We have only seen all our factors going with our luck in only one trade, and that has given us 108 points. So it is very crucial and important to learn all the candlestick pattern series, if not all, at least a few of them, which are very important. Otherwise, dealing with stock markets using technical analysis is definitely not a good idea. And also, I would like to mention someone from yesterday, because yesterday someone has commented that they have seen a loss. We kindly request all of you, to please carefully um, learn before you trade, and at least learn a couple of candlestick patterns, and then do enough back testing of at least 2 months and then also, after doing back testing, don't think that you're good enough to trade. Market will not spare anybody. So don't lose your capital. Please, after back testing, please be patient with the live markets, and do trades only with single lot, that too for 3 months consistently. So only after you have seen a profit consistently for the 3 months, and then start trading with your actual quantity. Okay. So once again, I request you to kindly learn the candlestick pattern series from our list of playlist, and then at least learn the major important major candlestick patterns. We do have a few important most candlestick pattern and videos coming in the future. So only after learning thoroughly, only after you understanding the concept thoroughly, then get into the back testing, and only after back testing, th- uh, then uh, then start trading with only single lot until you become profitable for continuously 3 months, and then take actual step. and i wish um, and I wish you good luck with the stock markets. So those of you who are watching our video, I kindly request you to subscribe for more such valuable post market analysis. And then we'll also learn about most technical concepts in a much meaningful and understandable uh, manner possible. So that's it for the day. See you in our next post market analysis video. Thank you so much.